Okay, first Zoom for Tasha here, so sorry about that. I think it's going to catch up with you in a minute. So this is just real quick. Obviously, everyone here is interested in buying a home, or else you probably wouldn't be spending your time on this Zoom. But there are advantages and disadvantages to owning a home or to renting. So the advantage is the no-brainer is that you're building equity. So if you are renting right now and you're paying rent, you are, you're giving your money away, right? Whereas if you buy a home, and you are actually investing in that home at some point in the future, if you sell it, you might be able to get your money back, right? So it's a good investment. It's also tax deductible, and it's an asset that you can pass on. So basically, it's a good. You're not losing your money when you buy a home. You're keeping it. You're not giving it away to the landlord, right? However, the disadvantages of owning a home yourself are going to be that you are responsible for all the property maintenance and the upkeep. So if you are currently very comfortable with calling the landlord when the roof leaks, you just need to know as a homeowner, that's your responsibility. As a realtor, we will go through and talk about your financial situation, what payment you're comfortable with, and we will I would encourage you not to spend it so that you have money set aside. And that's something that I would advise you on as we go through. But you're responsible. It's not as easy to move as renting. So you might have to sell your home or rent it to someone else to be able to move. And of course, there is the risk of losing your home, but that just means you need to make your payments on time. So, okay, so these things are no-brainer. How do we buy a house? Well, of course, you could buy it with cash, and we do actually do that. If you are buying a very inexpensive home, typically people buying houses for $10,000 or $15,000, it's not unusual to see them pay cash. More expensive homes, $75,000, $120,000, you don't usually see people having that much cash. So they're going to go out and get a loan. And that's really a lot of what we're talking about when we say buy a home. Is the trick is to get the loan, right? So that's called a mortgage. And most of the time when you get a loan, it's not going to be 100% loan. In other words, that means you're going to have to come up with some amount of cash on your own. So that's the combination of cash and loan. And then seller financing. Anybody know what that is? We'll get some interaction going. Maybe if I can see the chat. Okay, seller financing is otherwise known as contract for deed. And so I get a lot of questions about contract for deed typically through this session. And Christine, I think your volume's on, hon.
Oh, okay.
Anyways, we're gonna talk. Hi, you got a question for me? No? Okay. So anyways, we'll talk a little bit more about contract for deed later on, but that's basically you don't get a home loan, the seller keeps the contract. Well, that can work well if the seller's fair. And it cannot work real well sometimes if the seller is not keeping track of everything or is not using a title company so that there's a third party. It's an option that people will take if they do not have their credit in a place where they can get a loan. And I do contract for deed as well. But if you can get a loan, that's a better situation because now everything is in your name. The house is in your name. It's not just a note, and you have more protections under a mortgage than you would under a contract for deed, okay? And typically, honestly, with a contract for deed, one thing that's kind of a bummer is that you have to have so much money down. So I have a gal that's looking to buy a house contract for deed right now, and she's probably got to have about $10,000 to put down. We're going to find out later on with this grant that you could have as little as $1,000 with this grant and be able to have your your cash down, possibly. And so it's a better deal for you to get a loan if you qualify. Of course, so that's going to be the trick. If the PowerPoint works. I apologize, guys. I think we're frozen for. Okay, finally. All right. It's telling me my internet connection is unstable, which is probably part of the reason I'm having problems. But so the loan process. So if you want to get a home loan, you want to buy a more expensive home, especially if you're thinking you might want to take advantage of the grant money. The first thing you're going to do is an application. And you can actually do that a couple of different ways. You can go right out to Busey's website tonight and fill out a mortgage application there. You can do it by paper, or you can even go in and meet with the lender and have them help you fill out the application. So depending on how, technology focused or people focused you would like to be, you have some different options there for applying. Whether you get a loan with Busey or any other bank or financial institution, it's probably going to be pretty much the same thing. They're going to have you fill out an application first because they are looking for several things. They're looking for you to credit score, which we're going to talk about, that you company or same industry without any major gaps. Okay, so if you took a vacation between jobs, it's no big deal. But if you were off work for a year in between, that might be a problem.
Your phone had broke up when you was saying that.
Sorry?
Your phone, it had lost connection. It broke up when you was saying something about the credit score.
Oh, okay. So let me go back. So I think that the internet connection is maybe cutting out a little bit for people. I apologize if that's happening. So when you go to buy a house, there's three things, okay? One's your credit score, and we're gonna talk a lot more about that in a minute, okay? So we're gonna go back to that. I'm kind of just foreshadowing. The other one is they want you to have a job, and usually they want you to have been employed in that job or in that industry. Like you could be a CNA and have worked for a couple of different places if you were always a CNA for the last 2 years in general. Okay, and then the last thing they're looking at is to make sure that you have the money for the house that you want to buy. And what I mean by that, the fancy term is debt to income ratio. So let's say that, you want to buy a house and you're thinking about, you want a house for maybe a $600 a month payment. You're looking to buy a house around $75,000. And, as long as you make enough money for that payment, the bank's going to be like, perfect. You can get that loan and your credit and the employment. But let's say that you went out last month and you bought a brand new $75,000 car and you have an $850 a month payment on that. Well, now the amount of money that you have for your mortgage has went down. So basically they look at all of the debts that you have. So your car payment, that's usually it for most people, and make sure that you can afford the house that you want to buy. So those are three things: your credit, your employment, and your debt to income ratio. Basically, they want to make sure that, you've got the money to pay the payment, to cover the payment. All right, processing. So loan processor, that's basically a person that works with your lender who is, after you have turned in your application, they're going to actually call your employer, make sure you really are employed there. They're going to run your credit, of course. So and by the way, you can talk to the lender and get your questions answered, and you don't have to have them run your credit. So what's kind of nice about that is, if you're not sure if you're ready to have your credit ran, you can call them and feel it out. And that's what I would really encourage you to do, or call me at the end of this. So, we can help you figure out if you're ready to start, if we need to work on your credit a little bit more, all those kinds of good things. So the loan processor is going to take your application. They're basically going to make sure everything on there is correct. And during that time, sometimes they ask you for more stuff, like the loan officer is going to have you bring in, most loan officers, now this is in general, they're going to have you bring like your last 2 check stubs, your last couple of bank statements, If you don't have a checking account yet, you might want to think about opening one, okay? We can talk more about that in a minute. And then they like to see your last 2 years of taxes. So they're going to look at you. The other thing that happens is an appraisal, which I'm going to talk about in a minute. They get all that and they process all your stuff. And at the end, they say, hey, you look good. We like you. You've got a conditional approval. And then it moves to underwriting. And underwriting, if you've ever heard of underwriting, they kind of are a pain in the butt. Sometimes what it is your lender, the bank wants to make sure that Diane, the lender at Busey, doesn't just really, really like you and really wanted to get your loan through. So they actually have an underwriter, which is a totally different guy in a whole different building that looks at everything again and says, yes, I agree. Their financing looks good. The appraisal looks good. And we are okay with everything. Sometimes they ask for extra documentation at that point. So this is near the end of the process. But when they come back and say, you're good, that's when you get what the realtor loves to hear, which is called clear to close. Okay, and then you actually go to closing at a local title company. You sign all the documents, the final documents, and you get your keys. Okay, so that's just a real nutshell loan process. Okay, there's different types of loans, and by the way, you don't have to remember this stuff. In fact, a lot of this is what we are here to help you with. But it's nice to know the framework and to have an idea of what's going on. But don't feel like you have to remember every single type of loan or any of this stuff. That's a little bit more than you would need, but we like to explain them. So a lot of times the FHA loan is sometimes called the first-time home buyer loan. It's actually not a first-time home buyer loan. Anybody can do it. You don't have to be a first-time home buyer. The reason that they call it first-time home buyer is that a lot of times when you've never bought a house before, you have as high of a credit score typically to get an FHA loan. And if you see this thing, so let me explain what all this is about on here. It says FHA, 3.5% down. So let's say you're buying a house for $50,000. No, let's make it simpler. Let's say we're buying a house for $100,000. Your loan is actually only going to be 97.5%. They're going to make you come up with 3.5% or $3,500 as your down payment on that loan. Okay. Now, there's ways around that, so don't freak out yet on that. But anyways, so that's our typical. So they want 3.5 down. They minimally want a score usually of about 620 for your credit score. We'll come back to that. And then you can do 6% seller concessions. What does that mean? That means we can go back and ask the seller for 6% of the sale price towards your closing expenses. So if you were going, oh my God, I'd have to have $3,500 down. Well, we can ask the seller for $6,000 towards your expenses, which makes it a lot more affordable for you to get into the home. When we get to talking about the grant, the way the grant works is it allows it so that you can have even less in your pocket. But the more money that you come up with on your own, the more money they give you. So they encourage you to come up with as much money down on your house as possible. And of course, money down on your house is equity, which equity just means the investment, the money that you have in your house. Okay, so that's the FHA. A conventional is thought of as the regular loan. Back in the day, used to be you had to have 20% down. So typically the way this works is the more money that you put down and the higher the credit score that you have, the cheaper your loan is going to be. So if you have a really good credit score and you put a lot of money down, you can get a really low interest rate with a low. You can only get 3%. So in our example of where you were going to have a $100,000 house, you can get $3,000 back from the seller. So, you know, we go to buy a house. You go to buy a house for $100,000. You're doing a conventional loan. It's $5,000 down for the 5%. So, you know, you might want that $3,000 from the seller, which just leaves the $2,000 for your down payment. and then your closing expenses, which will be added into that. And we're going to come back to that and talk about those specifically. Okay. So, but the conventional is just, they have ones now, you only have to have 5% down. But typically it's a little bit better loan. Not always, just depends. VA is only available to veterans. Okay, so if you were in the Army or the military in any way, shape, or form, you qualify for a VA loan, and it is an awesome deal because it is 0 down. So that's a good deal for you. You do have to have a little bit higher credit score, but you can get 4% concessions. A USDA loan, anybody who's thinking about buying in the country, that's also known as rural development loan. But those houses are only outside of the city, and so they actually have a little map. So if you start looking in houses, you know, maybe in like Moequa area or Illiopolis, something like that, you might be able to get a USDA loan where it's again 0 down. So it makes it a little bit easier. Portfolio loans themselves, one of the problems that people who are in business for themselves run into is they like to show as little income as possible. But then when it comes time to qualify for that loan, it's a little bit harder for them to get the house they want because they didn't. So sometimes there's ways to get around that by showing your assets from your business or whatnot. Those are called portfolio loans. For the most part, the FHA and the conventional loan are going to be, it's going to be one of those, okay? Where do we start? You're going to start with getting pre-approved, okay? So today, if you decide, I think I'm ready, or even if you're not sure if you're ready, I want you to, again, text me, call me, and also call Diana, especially if you think you're ready to take that step. And she is actually going to run your credit and see if, you know, and talk to you about your employment and your income and see if you will meet those qualifications. Then she gives you a pre-approval letter and we start shopping for houses. Now, you can start shopping for houses before you get approved. But the problem with that is A, you really don't know what you can afford because you're not sure what your payment's going to be at if you haven't talked to the lender. And B, I don't want you to be heartbroken if we start looking at $120,000 houses and you find out you can only afford an $80,000 house. It can really throw a wrench in things. It is so much better, but really the big reason is right now, and I don't know if you guys are aware of it, but the market is crazy. And if a house comes on the market that's priced right, it's going to be sold in 1 or 2 days in Decatur, Illinois. If you are not a pre-approved buyer, you don't have a chance at it. So that's basically the long and the short. Really, you want to get your letter in place so that when we find that house and we go write that offer, it's probably not even going to look at their offer. And if he gets the offer from us and we are not pre-approved, they're probably going to say, we want a letter before we will take. So, okay. All right, so I'm not going to spend much time on this at all. It's pretty boring. They do, so the lender charges you fees. So there's several different expenses that we're going to talk about with real estate, and one of them is your actual lender fees. So another one is going to be your appraisal.
Yeah, they're saying.
You can't hear me?
Well, they can hear you, but you. Share sound, yeah, that's what we want. Okay. See if we can make this better.
It told me a couple of times that the internet
Yeah.
was unstable. So I think it's the internet.
Mm-hmm. I don't want to leave. You're doing this thing. So. Sorry, guys, I'm moving stuff on her. All right. Our recording. Isn't up there. I don't know why. Okay.
Can you guys hear us?
Don't have the applications open on here. Yeah. Yeah.
We just did that, didn't we, though?
Well, I could see at least some people in there. Okay.
We can also, well, do you want to see the?
Yeah. I can see. I told Alyssa off. Regina's on, and yeah. Most of them are off now.
Oh, so they were on, so that was okay.
Yeah, most of them were on earlier. Not a big deal. I don't want to show the video. I want them to see you.
They don't have to.
All right. Let's see.
Oh, 32 participants.
Yeah. Oh yeah. No, here. You've got a crowd there, that's for sure. Which is why I'm like, okay, how can I help this be better? All right, so Zoom share. Yeah.
Maybe just get rid of the chat.
Minimize that back out. Yeah, your
Internet
internet connection is
unstable.
unstable. It's
the internet.
yeah, and it just does that in these rooms because I can't get. Yeah, I'm not gonna go into that right now.
Oh, I got you.
All right, I can't see you, but can they hear you?
Can you hear us? You have to look at the chat.
Yeah.
Yeah, we can hear you.
Right there. There you go. There's one in there.
Yes.
Okay,
Okay.
that's fine.
So
I don't care if they can see me. You guys don't
Alright.
care if you see me, do you? So should we shut the chat too, just in case?
I'll minimize it again. Okay, yeah, so they can all hear you. So talk, and I will keep an eye on that, and I will come back and try to mess with it again if that doesn't help.
Okay.
I'm also going to turn Alyssa off.
Okay. Okay, so Diana thought it started at 6. She's on her way. Yes. Okay, so we'll keep going. Let's talk about credit score. Here's the part that you guys are really interested in, right? So your credit score is basically a 3-digit number that is supposed to let financial institutions know whether or not you are a good bet for them to loan you money. Is it working pretty good, we think? I hope.
Hold on, your screen's blurry.
Oh.
Why is it? The screen
I
is
just heard somebody.
yeah. We're trying.
I'm sorry, guys. Maybe new share. Or just take too long.
All right, let's pause the share. Let's stop the share. Let's minimize these. And okay, I'm gonna escape there. And okay, come on. Let's try here. Okay.
Wasn't connected to the right internet.
No, only why this PC would automatically connect to that, I don't know. Okay, so I'm gonna pull that back up And we're going to say from the current slide. And we're going to do that. And we're going to screen share and the PowerPoint. And what is that actually?
Yay! Still a little bit blurry, but it's all right.
Can I make it go back?
Mhm.
Okay, so that's your schedule of fees. That's
Mhm.
back, forward. Is it any better? It's not any.
Where are I?
I don't know.
Some of them are easier to see, so
Okay. Well,
we'll send it to everybody if they want them to. So
okay, that's better.
okay, that's a little bit better.
That's a bit better.
Okay.
Well, and now it.
Boy, that was weird.
Okay, now it's altering. Okay, so let's see if this helps.
Okay.
Welcome to tech support. You know.
Okay, weird. Okay, credit score. Back to credit score. All right, so there's 3 agencies that make up the credit scores: Equifax, Experian, and TransUnion. Okay, so all 3 of them get information from financial institutions, and depending on how you have paid your payments, they will give you a score. So if you bought a car before, that was reported. There are actually some credit programs I know where you can actually sign up to have your power bill reported every month, which is a good way to build your credit. In general, the lenders look at all 3, but it depends on the financial institution, okay? And real quick, just a quick word about Credit Karma. I actually use Credit Karma myself because it's kind of nice to see the different greens and reds, and it kind of tells you what you need to do in terms of, make sure you pay your payments on time, or maybe you've got too much debt here or whatever. It kind of helps you sort through to raise your score. However, there's a major flaw with Credit Karma and the credit score that they're giving you, because they only give you 2 out of the 3 credit reporting agencies. So it's sort of like Russian roulette with the credit score. If that 3rd score is really good, or is the same, you're good. If that 3rd score has something bad that was reported to that company that wasn't reported to the other 2, it can really alter your score. So I usually tell people, whatever your Credit Karma score is, know that it can swing by 20 points easily. It can swing by 50 points, honestly. I've seen that. So you might have a better score than what you think. You might have a little bit worse score than what you think. I'm actually going to give you a resource in a little bit to go out and not get your credit score, but actually look at your credit report. It doesn't have your credit score on there, but you can get a free credit report every year. And that you can just look at it and tell if you've got something delinquent on there, if your payments have been on time, or if there's something on there that shouldn't be on there that you need to dispute. Okay, the score ranges for a credit score range from 350 to 850. I've actually heard that you can now get a 900 score. 850 is a really high score. In general, if you have a score of 700, that's a good score. You're not going to have a problem getting a home loan unless you have a bunch of car debt. In order, if you guys may recall earlier when we were looking at this, remember for the FHA, your usual minimum is a 620 credit score. Conventional, the same. However, it does depend on the lender. There are some more high-risk lenders that might go as low as a 580. In general, the higher requirements means it's probably going to be a better deal. You're going to get a better interest rate. Perhaps you could get a local lender like Busey that if you do a conventional loan, they actually keep your loan. They don't sell it to another company. We're aiming for at least the 620s, but 700 is definitely a goal that is one of my goals. Probably, I would think everybody. Okay, so here we are. Sorry, I already talked about this before we got here. 740 and above is thought of as an excellent score. 680 is a good score. Diane, 620 is a fair score, and 620 and below is poor. Now, if you're in the poor categories, don't freak out, okay? There are ways to improve your credit, and that's what we're going to talk about real quick here. So, and this is probably, if you're gonna like screenshot anything from this whole presentation, this is possibly the slide that you would want to do that on, because this is really how you, if you look at these different aspects, this is how you can repair and build your credit. So the credit score factors, 35% of it is your payment history. Try to make those payments on time, and especially the credit card payments. They report you when you are 30 days late. They report you when you're 60 days late. They report you when you're 90 days late. If you can't make those payments, call them up and make payment arrangements. But that payment history is one of the most important factors, and it's really probably the one that just kills people all the time. So late pays, collections fits into there. So if you have collections, you're gonna try to get those paid off so you can raise your score. Medical debt can be, you might be able to get away with a little bit of that, and that's something to discuss with Diane, who just came in. Say hi.
Hi.
Of course, if you've had a repossession or foreclosure, that's going to hurt you. A tax lien is going to hurt you. A bankruptcy or a judgment is going to hurt you. However, you can come back from some of those things. In particular, I know with the bankruptcy for you guys, they need to have 2 years
out of the bankruptcy.
2 years. So, you know.
2 years from discharge date.
Right. So if you're right now, you know, looking at repairing your credit and you're thinking, am I going to go ahead and take bankruptcy or not? Basically, as soon as you do that, your discharge date starts the clock. I mean, start building your credit again. And 2 years later, you can buy a house. And we've had people do that.
Right.
It happens all the time. So, you know, if you have to start from the beginning, there's no shame in that game. You know, you will be able to recover from it. But if you're not all the way back there to the bankruptcy, just start making those payments on time, make them more manageable. The amounts owed is the other issue. And I had mentioned that earlier when I talked about that debt to income ratio. So you can't necessarily, we just had this happen not very long ago, you know, have just bought a brand new car and then turn around and want to buy a house. So if you are thinking you want to buy a house in the next year, don't go out and make other major purchases. Put your money in the bank and put it in your savings. And pay your credit cards down, pay down your other loans, pay down your car loan, pay off those student loans so that you can buy a more expensive house, right?
Right. And on that credit too, do not, I just had a problem with this, do not dispute anything on your credit report. Disputed accounts are a very big issue if I'm doing an FHA loan.
Really?
Because if it's a disputed account, then I have to do it, it has to be downgraded to a manual underwrite. And if it's a manual underwrite, then the underwriting is a lot tougher than if I get it through the automated system.
I wonder if they are doing that now because of the credit repair people going out and just disputing everything.
Could be.
To raise the credit temporarily.
Because what happens when they do that dispute, then when they do those disputes, the credit score doesn't take those disputes into the consideration.
Right.
So once you take those disputes off, it could change that credit score, it could lower that credit score. So that's why disputes are not a good thing. So do not dispute anything on your credit report.
Okay, so let me back up. So let's say this is a good reason why you should look at your credit report now. And again, I'm going to give you a resource to go do that for free. But if there's something on there that's not supposed to be on there, you know, this actually happened to me once. I ended up with a medical bill from an ex-husband, and we weren't married at the time, so it should not have been in my name.
Mm-hmm.
And he didn't pay it and ended up there. So I did have to dispute that. That's what it's called. You would reach out to the credit agency or perhaps the hospital or whoever it is, mm-hmm. and tell them, look, this is not my bill. You probably have to provide some documentation to them. One of the things that some of the credit repair people might do is go out and dispute all your credit things that are out there in order to raise your score. And I think that the banks are catching on to that.
Yep.
So that's where, so if you're going to do an FHA loan, Diane says don't have any recent disputes. I mean, obviously you could have a dispute from ever, but right. Nothing recent.
And as long as those disputes are paid off.
Okay.
They have to be resolved and paid off.
Resolved and paid off, right?
Yes.
They can't
so
still be out there unresolved, unresolved dispute.
Yes.
Okay. So and if you have questions about what that is, again, you know, text me 217-201-2610. Call me after this. Put them in the chat. We're going to have Diane's phone number as well here at the end. But, you know, please reach out because I know that this is a lot of info and hopefully we're not throwing around too much at you. Okay, the length of your credit history is also important. One thing that I actually didn't realize because I once upon a time got into a little bit of credit trouble and did some consolidation loans with some credit cards. And then I closed those credit cards. And I did not realize that when I closed them, it actually hurt my credit score.
Yep.
I thought I was closing those credit cards so I wouldn't have that out there and, you know, whatever, even though there wasn't any money on it or anything spent on, there was zero balances. Well, they actually are looking at the length of your credit history. So you don't necessarily want to close that Sears account or the Target card after you pay it off,
Right.
okay? New in credit, so a soft inquiry or a hard inquiry. So what that is if you decide that you're ready to buy a home, your credit's going to match up and you want to get this grant, you're going to call Diane this week. Okay, you're going to call her right away and she's going to run your credit, and that's going to be a hard inquiry on your credit score. One thing about this is sometimes people don't realize that that actually affects your credit score. We actually had somebody that just not very long ago went out again, bought a car, and let the car dealership, trying to get them a better interest rate, ran their credit with a bunch of different financial institutions.
Yeah, like 20 times.
So like 20 hard inquiries on their credit score, which hurt their credit score. So you want to be very careful about who's running your credit, why you're allowing it to be ran, and be discerning in how you use your discerning. Be, you know, discriminatory in how you're using your credit and what you want to do with your money. Okay. The other thing about the hard and soft credits you can actually, if you want to shop around a little bit for a mortgage loan, you are allowed to do that. So you can go to more than one mortgage lender and have them run your credit, but you have to do it in the same period. So like
Within like a 30-day
within
period.
a 30-day period, and it will show up as one. So let's say that you go to Busey, but maybe you want to check with your regular bank that you already bank at and see which one's going to work better for you. You can go both places so that you can find out which is going to be the better for you. But you have to do it in 30 days. Okay. Any questions about that hard, soft credit thing? I'm almost afraid to look at the chat because it might throw off our, hold on.
Time.
No, well, our time for sure, but. Okay, so usually it's a hard inquiry, and you just ask people. A pre-approval is a hard inquiry. Okay, so you just ask them. So if you know, when you're talking to the lender, you can call them up and say, okay, here's my income. You can fill it all out, and you can say, you know, they can tell you, well, Diane will tell you, I think you're ready. Let's run your credit. Or you know what, I think you should go ahead and pay off this medical bill and kind of call me in a month.
Right.
Right. So
Right.
that's where the lender is going to help you. A soft inquiry on your credit will actually happen at the very end. So at the very end of the process, going back to, remember we were just talking about that a few minutes ago, right before they give you your final offer to close, they're going to call your employer again and make sure that you're, and they're going to check your credit again to make sure that you didn't go out and buy that, you know, that new Benz.
Right.
So that's a soft inquiry. Okay.
Yeah.
So they check your credit when you get the loan originally, and then they check it at the end, right before they sign on the dotted line and you sign on the dotted line. Lots of different types of credit. Mortgage loan is a home loan, auto loan, credit card loans. Okay, so if you are building your credit right now and you have a low score or no score, so this happens a lot, there are ways to improve your credit. And if the PowerPoint will keep on. I opened that chat. I shouldn't have done that. Okay, so pretty soon here. There we go. Ways to improve your scores. So first of all, down at the bottom of this, if you see the annualcreditreport.com, write that down, or again, if you send me, you text me, or you put your information in the chat box, I will send this link to you. This is where you can go every year. It's a government site, and you do not want to Google this. If you Google credit report, you are not going to end up on this site, okay? You're going to end up on a site where you have to pay to get your credit report. This is free, okay? So you want to type in exactly annualcreditreport.com. And you can go there and see your credit history. And if you look on there and, you know, like I said, your ex is old medical bill is on there, that's an error on your report. And
Right.
you can get in touch with that hospital or that credit reporting agency to dispute that and fix it.
Right, and you can dispute it right there on that site. Now,
Oh.
that won't hurt it. If you dispute it on that site, it won't go on your credit report. They will fix
Oh.
it though. What they'll do, they have 30 days to investigate. So say, for example, you went out and seen your bill and said, hey, that doesn't belong to me. They have 30 days to investigate. If it's not yours legally by law, they have to remove it off your credit report. And it will not show then on your credit report that I run that you disputed that account.
Perfect. I love that. So if you guys did not catch that, if you go to annualcreditreport.com, you see something on there that's not supposed to be on there, you can dispute it right from there, and it will not affect your ability to get a loan. Okay. Number two, this is really a big one because most people do have credit cards and they have other loans out there. Pay them down. I'm going to give you a rule of thumb for your credit card. This is one of the best pieces of information anybody ever gave me financially. Whatever your credit limit is, you do not want to utilize all of it. So let's say, for example, you have a credit card from Target and you can spend up to $1,000. You do not want to keep your balance on there at $1,000. Boy,
30%.
it's hurting you. Yes. You want to be at 30% or less, which means you only want to have $332 on that $1,000 credit limit or less. When you are down to that point, when they report you at the end of the month, you actually get a good star. You get a star to the credit cards. So it's actually a good thing. So this is where having credit can help build your credit. But if you don't use it properly, if you keep your balance up there at 80% all the time, instead of it building your credit, it's actually going to hurt your credit. If it is up above 49%, if you have more than $499 charged on that $1,000 credit card, it is hurting your credit. Okay? Has to be less than half at all times. Use it and pay it down. Use it and pay it down. That's how you build your credit. The other thing that you can do if you really have no credit score at all, sometimes it might be hard even to get a credit card, but you can probably go to your bank and get a secured credit card. That's sort of like a debit card. You put money down on it first, and then they let you spend that money. And then as your credit card grows, as that secured card grows, then at some point your credit score will get high enough, you'll be able to get a regular credit card. Or another type of loan, go out and buy a car and pay it off before you plan to buy a house. Okay, so that's a really big one. If you're having financial problems, if you go out to the annual credit report and you got lots of 90-day late pays, and that you've got $5,000 in bad debt, get that stuff taken care of first and then apply for a mortgage. You're going to get a better deal.
Right.
Okay.
And if you have bad debt, places will take settlements. So you can always do settlements on those collections. They'll try to tell you that they're going to report to the bureaus that you paid less than the amount owed, which we don't care. As long as we see that zero balance, we don't care that you made that settlement.
Right. So number 5, don't purchase big ticket items until the loan is approved and closed. Okay, so again, they run your credit at the end. So if you have bought a house, and people do this, I don't know why, but you bought a house and then, in the interim while you're waiting for the loan to close before you actually get possession of the house, between writing the contract and buying the house, you go out and you buy new furniture on a loan.
And then your ratios are over.
And it changes your credit score. You might not be buying a house anymore. So you don't want to buy any big ticket items at all. You want to focus on buying your house, okay? And don't open any new credit accounts right before applying for a mortgage. That also, because they're running your credit score, or during. Don't even rent furniture. Here's my favorite one. Don't co-sign.
Yeah.
What are the rest of our don'ts? Okay, so I'm going to go through some of this stuff a little bit quicker because I really slowed down a lot on the credit stuff. But basically, the credit stuff is really the meat of this, what everybody comes to for this. Once you are ready to purchase, that's where we really start looking at buying the house and the process, okay? I'm going to help you understand your costs. So depending on what type of loan you get and whether or not we ask the seller for closing cost concessions, or whether or not you are getting
Grant money.
grant money, that's going to change your costs. Also what inspections you decide to do. So that's where it's going to be kind of individual. And that's really honestly a lot of what my job is, explaining to people about the process and the expenses so they know what to expect, so they're ready. Okay. Also, of course, I'm going to help you find and evaluate homes. So I have actually access to, everybody can get on the internet today and search for homes, but I actually have access to homes before you. And the way the market is right now, literally, if you don't have a realtor, you're probably not going to get the house that you want, because it's vicious out there. It's multi offers, and there's just not that many houses on the market right now. So it really, the supply is low and the demand is up. Price negotiations, of course, I'm gonna try to get you the best price available on that house. And we also will coordinate inspections and deal with that fun stuff, and then get you to closing. So all the other stuff that I've advised you about so far, we're gonna talk about that. When you're thinking about your home, there's two things. There's what you want, and there's what you can afford. So I always encourage people to make a list of wants and needs. I need 3 bedrooms. I want 2 bathrooms.
There you go.
I need a garage. I want a 3-car garage. And that way, you know, you can prioritize, because it is hard to find the perfect home. Okay, but that will, I will help you with that. I get a lot of questions about short sales, foreclosures. I talked a little bit about contract for deed earlier. There are other, you know, ways of doing it and lingo that gets floated around there. Basically, a foreclosure is someone who did not pay their house payment and it went back to the bank. A lot of times these houses do go for cheaper, and maybe you've seen them on Zillow or somewhere and thought, wow, that looks like a great deal. Beware of that, by the way. But the deal with it is that sometimes those houses have sat empty for a couple of years, and there's no water on and there's no power on. And if there's no water and there's no power on, then the bank will not be able to do an appraisal. And if they cannot do an appraisal, they will not sell you the house.
Because some places won't turn the utilities
They won't
on, right?
turn, yeah. Now, this is not every single foreclosure, so we would look at this on a house-by-house, case-by-case process. I mean, we actually did a really nice foreclosure a couple of years ago for $225,000 at a Morningstar, and it was a foreclosure, but they did actually turn on the water for the appraisal. But, you know, if you're looking at a, you know, a $45,000 house, it may be a problem. So a lot of times, it looks like a $75,000 house, and wow, it sold for $55,000. How did that happen? Well, it happened because since nobody could get a loan on it, somebody bought that house for cash, $55,000. So when a house can only be bought for cash, it really devalues it. And a lot of the problems are often is mold, water damage, things like that. A short sale is very similar to a foreclosure, but in this case, the bank has not foreclosed on the house yet, but they're going to allow you to buy it for less than what the person who lives in it owes on it. Those don't happen very often. If you have questions about that stuff, I'm going to encourage you to contact me. Okay. Once you find the house, negotiations. We're going to look at what other houses like that house sold for, comparable properties, to try and determine what you should offer on the house. When you make an offer on a house, you have to give earnest money, normally $500 underneath a $100,000 house. So again, when we start looking at houses, this is where I'm going to be prepping you, making sure that you're ready for that money to have that. Okay, inspections. We might have a whole house inspection. We might have a radon inspection. We would probably have a termite inspection. I'm going to help you coordinate those and get through them and ask for repairs if needed from the seller, right? Getting to closing, making sure you've got your homeowner's insurance. Title work and closing, you really don't need to know a whole lot about that, but basically, especially the bank is going to want to make sure that there's no other liens against the property. So for example, let's say the people you're buying it from had a mortgage. Well, when you buy it, their mortgage gets paid off. You get a free and clear title. Nobody else's name will be on that property. So the title company, which is backed up basically by a lawyer, they come in at the end and do some stuff where they make sure everything is all nice and legal. And that's where we actually go to close and sign the day you get the keys. Closing costs. Okay, so real quick, we talked about the down payment, remember at the beginning, and I said, okay, if you do a $100,000 loan, it's an FHA, you're gonna have to have 3.5%, that's $3,500. That's your down payment, okay? You're going to have some other expenses, and typically those are called prepaids, closing costs, things like your appraisal, your homeowner's insurance. So yes, you're gonna actually need more than that $3,500 to get into that $100,000 house. You're probably gonna need $5,000 or $6,000 by the time it's all said and done. So knowing and getting through your expenses, because they do change by price, is something that you're gonna work with your lender and with your realtor, okay? So they do go by price. All right, I'm gonna let Diane talk because you're probably sick of hearing me. And here's the part, right, at like 1 till 6 that you really came for, right? The grant.
Okay, so grants just came out in January, like January the 19th. And it's first come, first serve. So we shouldn't run out. Usually like mid-summer, we usually run out, depending on really how hot the market is. So the way the grant works is that they do not allow any gift funds. So this money has to be money that we can prove is yours. So it has to be either in an account, or if you're getting a tax return, now's a great time to buy a house with the grant money. So it's based on household income. So anyone under the age of 18 that lives in that household, we're going to count their income. So if you have $1,000 of your own money, you're going to get a $3,000 grant. If you have $1,500 of your own money, you're going to get a $4,500 grant. And if you have $2,000 of your own money out of pocket, you're going to get a $6,000 grant. And that grant will go towards down payment and closing cost. And then you live in a house a minimum of 5 years, and then that grant totally goes away after the 5 years. So it's a really good program, but once again, it's based off income. So if you're interested in the grant and you qualify, the first thing I'm going to ask you is how many people live in your household that are under the age of 18 that has income, because we're going to count that income.
Okay, so even if the loan, let's say that you live with your boyfriend and the loan's only in your name, they're still going to look at your boyfriend's income because he lives in the home.
That's correct.
But not necessarily his credit?
Nope, not his credit, because he's not going to be on the loan.
Right.
He's just going to live in that household.
So, and oftentimes you might have the option, if you're married or not married, if you have a partner, of, you know, doing the loan in one person's name or both.
Mm-hmm.
And if you're married, you'll still have protections under the state.
Right.
With the down payment assistance, one of the questions I get all the time is a credit score. What's the minimum credit score? And I know you said this year that there's not a minimum credit score.
Not on the $6,000 grant, but now I do have an IDA grant. The IDA grant is, you can get an IDA grant. It's 4% of the contract sales price is what they'll give you. That is a 10-year retention on that one. So you'd have to live in the house for a minimum of 10 years. And that one, you'd have to have $1,000 of your own money out of pocket. It's 1,000 or 1% of the contract sales price, whichever's higher. And that actually can be a gift. So if somebody wanted to gift you that $1,000, they could actually gift you that.
That's awesome.
But you have to have a 640 credit score to get that one.
640. So with the first time home buyer grant,
Mm-hmm.
I mean, in the past, it's been about a 640.
It was, but they've changed it. So now there's no, as long as you get an approved eligible with the program you're putting it into, then, and the lowest I can really go now is a 620. That's the lowest I can go.
Okay, so if you're out there and you're thinking, is my credit score going to be high enough to do this? Probably looking at about a 620. But again, I want to encourage you to reach out to us because, and check your annual credit report, of course, first. Because you might be wrong. It might be a little bit higher. It might be a little bit lower. It's really, it's hard to know.
I have a lot of people that will check on Credit Karma, and I can tell you right now, my score is usually going to be lower than Credit Karma is going to show you. Mm-hmm. So Credit Karma is always going to be higher than what mine's going to be.
Right. So usually I tell people to just go ahead and shave off 20 points. Mm-hmm. So if Credit Karma is saying 640, you're probably at like a 620.
Right.
Okay. All right. Okay. This is our contact information, and this is my cell number and Diane's office phone number. So you can call Diane tomorrow. And
well, not tomorrow. I'm not going to be here tomorrow.
Oh, sorry.
And Monday's a holiday.
Monday's a holiday.
But I'll be back on Tuesday.
Or you can email her. The other thing that you guys can do, if you are ready, you can go online to Busey.com and apply over the weekend. And then when she comes in Monday, she'll have everything ready to go, and it'll be probably a little bit quicker process.
Right.
Since they've already done the online. So if you're comfortable going online and you guys are all on Zoom, that might be a good option to go ahead and get it done over the weekend if you're really, really anxious. And call me also, because I am anxious to talk with you and find out what price range you're going to be in and get you started looking for homes. The market is really competitive right now. So you are definitely going to want to work with a realtor. You might be working with another realtor. Any realtor is going to be a great realtor for you, I hope. But definitely if you don't have a realtor yet, I would love to help you. So please, you can call me, you can text me, you can email me. You can also check out my Facebook or my website, all that kind of good stuff. I'm going to actually look in the chat here for a minute and see if we had any last minute questions.
And also, if anybody's going to do a Busey app online, when you get to the bottom, when you get to the end of the application, anything one you're not for sure to put what you're not sure of information, leave it blank. But when you get towards the end, there should be a drop-down box for loan originators. Be sure and pick my name, and it'll come right to my email.
Okay. So if you do the online application, when it asks you for loan originators, pick Diana's name. Diana is wonderful to work with, by the way. And if you're not a computer person, you can just call her next week or go in and meet with. Are you guys taking appointments now?
Mm-hmm. Oh, yeah.
Okay, you can actually go into the bank now.
Yeah, you just have to ring the doorbell.
Okay, so we have a couple of questions. We have, if a child gets SSI, would they count that?
Yes,
they would
will.
count that.
Yes.
And if you actually get disability of some kind, any income could be counted towards your home loan. It doesn't necessarily have to be a job.
Right.
So I guess I said you need to be employed for 2 years. That's not necessarily true if you're retired or
Right.
you're on SSI. I guess
Right.
there's always an exception to the rule. How do I know where qualifies for USDA? Okay, so
Anything for USDA, it's not anything that's not Decatur, Forsyth, Mount Zion, or Long Creek. Anything outside of those it will be USDA.
So if you think of Decatur metro area, Decatur is not going to qualify because it's urban, and Mount Zion and Forsyth are hooked on, so they are also considered part of the metro area. So the rural development or USDA is going to be, Macon,
Maroa, Moequa, Niantic, Harristown.
or Jenna.
Yep.
And that is a good program. It is a little bit tougher as far as the qualifications for both the house and the person, but it's zero down.
Yeah.
And and I would love to help you with that and understand the ins and outs. How do you apply for the grant application? So here's how that works. You apply for the loan, and she'll be able to tell you if you qualify for the grant.
Right, and I'm the one that reserves the grant money.
And then she reserves it. There is a class that you do take, right?
It's an online class.
It's an online class. It takes about an hour. It's not a big deal. I've actually helped people with it before because sometimes I get folks that aren't comfortable with the online stuff. So I'm totally willing to help you with that if needed. But basically, you apply for the loan. Busey Bank has it. You can go right to www.busey.com. I am going to stop screen sharing so you can see us for 1 minute. Is this us? No.
Nope.
Where are we? Here we are. There you are. Okay, so hi, I'm Tasha.
Oh, I can't see.
There
I
you are.
am.
This
Hi.
is Diane. Just to put some faces to the PowerPoint real quickly. Hopefully this was good for you guys, informative. Even if you are not sure if you're ready, please reach out. I'd love to help you. Anybody have any other questions before we sign off?
Grants, the grants are not only through Busey, there's other local banks, as long as our office is in the state of Illinois, based in the state of Illinois, they have those grants. So there are other banks in the Decatur area that have the grants, along with there are some credit unions as well.
Really?
SFQ.
SFQ, okay. Hard to get along with them, but okay. Okay, so I got another question. Are the closing costs on top of the home amount? For example, $100,000. Yes. So yes, they are. So remember, the USDA grant and the VA are 100% loans, and the reason those are nice is because you have no down payment. Literally, if you buy a house for $100,000, you're getting a 100% loan. Your loan is $100,000. So in that case, you only have your closing expenses, things like your appraisal, your homeowner's insurance that you pay up front, some loan origination fees. So on a $100,000 house, they're probably gonna be around $3,000. It actually depends on a couple of different factors, the house itself, your insurance, where it's located. So what I would do is when you look at a house, we would estimate your closing costs, so you know kind of what you're looking at. Then that's an estimate, and at the very end, you get your final numbers from the bank,
which is lower.
we go to closing. It's always lower, yes. That is why the grant is so nice, or the 100% loans are nice, because if you're buying a $100,000 house and you're getting an FHA loan, you have to come up with $3,500 for your down payment, 3.5% of $100,000. If you're getting a grant, that's probably going to cover most or all of that. So you're only going to have to worry about the $1,000, the $2,000.
Right. If you do the grant, that's all you have to have out of pocket.
That's all you have to have out of pocket, period. So now with the grant, one of the things that should advise is you can't make too much money. Okay, so it does, they're meant to go to folks who need them the worst, folks who are, don't have as much income. They do look at how many dependents you have. So that's where once you apply, Diane will take over and counsel you as to what the best loan opportunities are for you.
Yeah, I'm thinking for one person in the household, I'm thinking it's like 39,950 this year, I think it is, for one person in the household. And then I think for two people, it might go up to like 42.5. I can't remember right off my top of my head, but somewhere around there. But that's where it starts at. It's out 39,000.
And okay, or email me at. Okay, so I'm gonna actually put my email in here. It's tashasells.houses@yahoo.com. So it's fairly easy. Plus, if you actually look up Tasha Real Estate Decatur, Illinois, you're only gonna find me. But if you email me, I will send you this whole PowerPoint. I also have another handout that if you talk to me ahead of time, so I had some people that contacted me ahead that I may have given you. That's like the low down do's and don'ts, real quick, of credit that I've developed from us doing this. So I can send that to you as well. But hopefully this was helpful. Start building your credit, and it might take a year, it might take 2 years, it might take 3 years. But it's definitely worth it. Definitely worth it. Everything will always be cheaper when you have better credit score.
Yeah, absolutely.
Okay, any other questions? All right, so don't forget to put your emails into this chat. They're gonna save this, by the way, so if you have a friend that missed this and they wanna suffer through my technical problems that we had, I'm so sorry about that. This will be up on the library site so they can go back and watch it later. And I'll probably post the link to my Facebook at Tasha Sells Houses. All right, guys, thanks so much, and have an awesome, awesome evening. I'm going to leave this up for just a couple more minutes since people are putting their emails in right now. But yeah, then we're going to sign off. Thank you.
So you had some technical.
They didn't have me on the right internet. So they said I was in and out a little bit.
Oh. Well, I got here pretty fast, though, didn't I?
I'm so sorry.
That's okay. I bet I hit all the lights green. I left out. I hit every one of them green.
Yeah, I was like, well, maybe she got somebody locked in this one.
No.
But yeah, so they're waiting on this. Okay, guys, I'm going to go ahead and close this. Thank you so much. Hopefully I got everybody's email. Everybody get their email in there that wants a copy of the presentation. Type it in real quick. Thank you, because the library lady's waiting for me to close this down to leave, I'm sure, because the library closed 10 minutes ago. I'm sorry we went over, by the way. I usually don't do that. All right, guys, thank you so much again. If you missed this box for any reason, you need to contact me. It's Tasha Sells Houses. All right, I can close this, right?
Yes, I saw that up and running in there, so I will capture anything at the end.
Okay.
And I'm sorry.